Sanwanani Dumelang, good evening and welcome to episode 295 of the Private Property Podcast. I'm your host, Uzamantungwa Khumalo. It's a Friday edition of the Private Property Podcast, and if you join us for the first time, welcome to it. Where have you been hiding? We're nearly 300 episodes into the only daily property talk show in South Africa. To all our daily viewers, our regular viewers, welcome back. You know how we do it. Every single weekday, you and I have an appointment at 7 o'clock where we're always unpacking the hot property topic that helps us make better property decisions. And we're exactly 1 week away from episode 300. I actually can't believe we're counting down to episode 300. I want to hear from you at home. What would you want to see on episode 300? You've heard us talk about various topics, from going from renting to buying your own apartment to growing your property portfolio, the different ways that you can grow your property portfolio. What would you want to see in episode 300? Drop us your suggestions here or across our other social media pages. You can even hit me up on @Zamantungwa_K on Twitter and Instagram as you share what you would want us to do for episode 300. I'm sure the team and I will do our best to make it happen, especially under these very intense COVID times that we are living in. But you also know that one of the things I absolutely love highlighting every single evening are the other shows that you can look forward to that are across Private Property's social media pages. I am talking about the Home Shoppers Show that you can catch later this evening at 8 p.m. with Chad. And that also comes to your screens every single Monday at the same time. And every Tuesdays and Thursdays, award-winning farmer Umbalino Pope comes to your screens with the Farming Podcast, which she always unpacks all things agriculture and really tackles various topics across the agricultural landscape. So that certainly is a show that you want to make sure you're tuned into if you are interested in agriculture. And every Wednesdays, Essie Clarkson brings you the First Time Home Buyers Show, which is always in conversation with people who have not only walked that first time home buying journey, but have gone on to grow their property portfolio from strength to strength. So do make sure that you keep in touch with us, continue following and engaging with us across our social media pages. If you're watching us on Facebook right now, do share this live so that your friends and family can also join in on the property conversation. And you can, of course, catch myself at Zamantungwa_K on social media. Now, this evening, we're doing things slightly differently. And I say slightly differently because we're always talking about different ways to grow your property portfolio and really finding out from experts various strategies that we can use to grow our property portfolio, to start our property portfolio, to better manage our property portfolio. This time around, we're bringing a property investor who's done just that. And we're going to be looking at residential property market investments and really reflecting on his property investment journey. He'll be sharing with us his property investment journey, looking at some of the principles that he's used for successfully investing in property, some of the lessons that he's learned along the way, and some of the mistakes that he's made. I mean, one of the things that you all know I very open about, even some of the mistakes that I've made in my own property investment journey that in some ways have came back to bite bite me. And in many ways, I'm glad I made them young. I made them early. I got them out of the way. And now I no longer, make them, and I share them with you at home and even on social media so that you do not have to make those costly mistakes. And to better get a sense of, how we can also perhaps use some of the principles that our guest has used in order to grow our property portfolio. I am joined by Peter Mohlala, who is a property investor, who's going to be sharing with us a bit on his journey. Peter, good evening, and thank you so much for joining us on the show.
Zama, good evening. I thank you for actually inviting me to come into your show. I really appreciate that. Hey?
It's only a pleasure, Peter. And I want us to get into it and firstly just start with, because we were talking of air, which was a really insightful conversation. I was teasing Peter, asking him how old he is, and if he's part of the group that is now going to be able to vaccinate, or he's still actually youth. I must admit, I'm very jealous of everybody who's now going to be able to vaccinate. We are waiting to also get in line. I've never in my life wished I was above 35 than ever before. I'm 31. We'll wait our turn. Hopefully, it won't be too long. But Peter, I think when we look at your property journey, perhaps share with our viewers at home how you started off in your property journey. In many ways, I like sharing with viewers at home how, in some ways, in my case, it was somewhat accidental, even though I kind of always knew that was a path I was going to take. Perhaps share with us, your property journey and where it started off before we look at some of the ways that you've been able to grow your portfolio and some of the tips that you'd like to share with our viewers later on.
Okay, great stuff, Zama. Thank you so much. My story, basically, it's a story of a rural boy that's coming from Pafalsuk in Akonok, Mpumalanga, moving into the cities and then deciding to actually buy properties with an intention of, at least building a very good property portfolio, but also, wanting to own, real estate agencies and, doing developments and so on. But it started in 2008. Now, in 2008, I've just resigned from university, from lecturing, because I was lecturing in the University of Limpopo. Now, in my account, I've got some few savings of about 100,000 or so, and I'm thinking in my mind, I do have these small savings. Where can I actually invest these small savings? Now, I ran into a bookshop, and I look for a book that is going to at least give me some light as to what to invest into. And I get this book that is written by Robert Kiyosaki. It's titled Rich Dad's Guide to Investing. And then the subtitle catches my attention. It says, what the rich invest in that the poor and the middle class do not invest in. I said, wow, let me actually buy this book and quickly go through it. So I buy the book, I read it, and the book speaks about, investing in general, speaks about the asset classes that people can invest into. But it also, says powerful statements like, investing is simply a plan. If you have a plan, a simple plan, and then you can stick into a plan, then becoming rich becomes automatic. And I thought, wow. So I then start buying a few more books written by the same author and many other books written by others. Now in 2010, which will be 2 years after, reading a few books about property investing, I'm thinking, let me start experimenting and seeing what's going on. Now at that time, I'm now based in Cape Town. So I go around, the area of Cape Town, around Brackenfell, and I'm looking for properties around. And I see this other wonderful property. It's on sale. I look at it. Then I decide to make an offer. The property was going for 485. I make an offer for 400. And the seller, says, what, great stuff. Let's have a deal. I sign it and then send it to the bank for financing. But 3 months later, I am walking around the same area. I see another, bot that's saying, property on foreclosure. This time, the bank is actually taking the property from the owner for whatever defaults and so on. So I go in there, and then the property is going for around 600,000 rand. And I'm thinking, you know what? I think I can make an offer on this one because it's on foreclosure. Make an offer for 400,000, and guess what? The bank accepts it. And I'm thinking, great stuff. So within a space of this 3 months, now I do have 2 properties that are actually going for registration. But in my mind, I'm thinking, Number one, will the bank be able to finance the second property because I've just made an offer on one? The second thing I'm thinking in my mind, is this the right decision to actually buy two properties at the same time? Because I'm thinking, what happens if, let's say, the bank gives me the money, but the properties are not necessarily cash flowing as I should, or the tenants are actually defaulting on paying the same? Will I be able to have enough capital to actually pay for the necessary, bond repayments, levies, and so on? And guess what? I still continue to do it. But I think a few years later, maybe 3, 4, 5, I started thinking, great stuff. This is a good way to actually start investing. But I must tell you, Zama, when I started buying these properties, in my mind, it was a process of experimentation. I said to myself, I'm going to be actually keeping these two properties with me. I'm going to be renting them out for the next 5 years. I want to learn and see whether these issues around, making money through property really make sense, because I was just only hearing it from books. So I'm saying, let me experiment and actually see if this is real. Will I be able to make money from the rentals that are coming in? Will the properties be able to appreciate as should? Will the rentals be going on every month as, people are usually say? And guess what? Those kinds of things actually became true. So I thought, now if this is true, I'm going to be investing. Now, 2015, I moved into Johannesburg, and then I started expanding my property portfolio. I started buying here and there in Johannesburg, and my property portfolio has been growing since then. And I'm still continuing. Just last 2 weeks, my wife and I have just sold 2 more deals, and we're moving on. But what I've learned through the whole process is that in the beginning, it's sometimes, tough, challenging, but as you continue to grow, and as you continue to invest, it becomes very easy, because if you look at, the difference between 2010 and now, that's more than, 10 years. And the good part is that many of the properties we have bought do have equity in them. What we are doing now, we just go and unlock the equity in these different properties, collect it, and then buy other properties cash, And I guess that's where the statement that people say, you do not need money to actually buy properties come in. Because when you're at that stage, you really do not need your own money to buy these properties. Just go unlock the equity in these properties that exist, and then you can pay transfer costs using the same money. You can buy new properties using the same money, and then you just keep on expanding your portfolio as long as you are able to actually balance the risk in terms of loan to value ratios and in terms of debts and the income that comes into the property portfolio throughout. So in a nutshell, that should be a little bit about what we're doing.
And I'm not going to comment on Robert Kiyosaki and his work. I've got a very not so popular take on him, so I won't comment, because I know also a number of our viewers at home follow his work quite diligently. One of the things that you've mentioned, Peter, that I quite like is you've certainly got the benefit of having started, in 2010. So there's also quite a substantial number of years you've been able to look at different patterns. Certainly also been able to observe how you're able to unlock equity in a property because you've been able to hold on to it for quite a extended period of time. And that's one of the things that sometimes a lot of newcomers or new property investors tend to not think towards. They're more often than not just thinking about, the 2, 3, maybe max 5-year cycle, but not looking beyond a 10-year horizon, for example, when it comes to ways of how that you can go about unlocking that equity and getting to a point where you no longer need your own, cash to acquire more properties. Certainly in the beginning you do, and even with, your own story and how you got there, you certainly do get a sense that in the beginning you'll use your own money. There are some property coaches who'll say, you can buy property with, 0 rands, and more often than not, I say to people, you're going to very mostly use your money. There are ways to get there, but the ordinary person who's looking to break into property tends to not have the skill set to be able to sometimes do that and raise the capital and put together a deal and get friends and family or other people to sort of buy into their property investment journey, so to speak, or whatever they've just put together. Peter, I want you to reflect on some of the mistakes that you've made, right? Especially because you've got the benefit of having started so many years and having bought, different properties, having observed different kinds of trends in different areas, from down in the Western Cape to even up here in Gauteng. What were some of the mistakes that you made over, your property investment journey that you want our viewers at home to firstly just be aware of, and then obviously not make?
Okay. I mean, one of the easy mistakes that I actually made was with the second property that was going for foreclosure. I want viewers to understand that reading your contract is very important, but understanding it is super important. So there was one of the clauses in the OTP. OTP, we're talking about the offer to purchase. So in the OTP, the clause was saying, I'm going to actually take occupation of the property at the time when guarantees are issued by the bank.
That's very early.
Great stuff. So now I'm reading the clause. The agent is explaining the clause to me. I'm thinking I understand, what the clause is saying. And in my mind,
you probably didn't watch out about the occupational rent, right?
No, of course I did not.
You're taking occupation so early, right? Because guarantees are very early on. They're easily 3 more months after guarantee. And so you're going to be paying occupational rent where you probably weren't even intending to stay there, right? You either weren't intending to stay, you were not ready yet to put in tenants in place. You were just thinking, I'm buying this thing, only when I have it will I put all these things in place.
And in my mind, remember, I'm still very new in this industry. I don't really have an idea what these things really mean. There's also another clause that has been put into the OTP. It says, in the event that I still I was not necessarily going to be the one moving in, I agreed to pay about 11% of the total, purchase balance of the purchase price against the occupational rental, a clause to that effect. Now I don't understand that, but it's in there, and I thought I understood it. So look at what I do now. I wait for the entire period from the time when I actually made an offer until the property registered in my name, for me to take occupation, because I'm still thinking in my mind that I'm only going to be moving into the property when it's now registered in my name. Now, the agent does not have a problem when I call her in between the 6 months and I say to her, you know what, can I actually go into the property and just look at the things that I need to repair and so on and so on? She says, sure, fine. She arranges, I go and look at it, and I get out. I'm just excited by the fact that the process is going on. But I don't understand that there is financial implication related to occupational rent and the interest that I actually need to be paying against, in the event that I'm not moving in there. So ideally, I should have taken charge of the property, in less than 3 months, the moment the bank gives us the guarantees, and I put in a tenant into the building and they start renting out. So I didn't do that. And it's purely because I did not understand what those clauses were saying. So now my advice to any of aspiring property investors is, remember to read the OTP and to understand the OTP. In the event that you don't understand the OTP, please find another legal opinion. Find somebody who's a conveyancer in the area where you are staying, to look at it and actually give you what this OTP says or what it means, so that you may be able to actually be fine. That's one mistake. But another controversial mistake relates to the fact that in one of these properties, at some point, my wife and I decided to say, what, we have kept this property for quite a long time, and the rentals that we've been collecting has been reducing the bond amounts. We are left with a small amount of bonds. Let's settle it, close it, get the title deed and move on. And we do so, at that time, we're just excited by the fact that we've, closed the bond, we've finished it, and therefore we've got a title deed and so on and so on. And we did not necessarily understand the impact of closing a bond and having a title deed. And the impact is this: for you to be able to unlock the money in the property, you will need to register a new bond, if a bank decides to refinance it. Now, registering a new bond is very expensive. the same way it is cancelling a new bond. So ideally, what it means is that my wife and I should have not necessarily closed that, bond, should have left it open so that each time we want to actually unlock, money from the property, we can easily do so. Or if we want to buy another property, we just simply take the money that is already in the existing property and then buy another property for cash. And we will not need to actually, pay for bond costs and related costs. And this one then will remain open, and then we'll continue to benefit from, the tax-related rebates that we can get from, having, properties that we are paying through the bank. So those are some of the two mistakes that I personally have done, and that I've seen that, over the time, maybe that's not necessarily wise to actually do. But I've also seen some mistakes that are done by lots of, new buyers. People make offers on properties they have not visited, simply because they have seen the pictures on the, web, and they're thinking this is all that is, and they don't go into the property. And they forget that you may find that the roof is leaking. You may find that the ceiling is sagging. You may find that the pipes are actually having problems, are loose, and so on. So those are some of the things that I've seen, people do. And my advice is always, you have to walk through the property. If you're not going to be walking through the property, get somebody that is specializing in, whether it's a contractor or whether it's somebody specializing in property investing and so on. Hire them, give them, give them the 500 rands or 1,000 rand that they want, as they walk through your property for you, to identify this and that, so that you can be able to save a lot of thousands that you would ideally then have to pay later on, through repairs and so on and so on. So those are some of the few, mistakes that I think, people need to actually learn from, so that they don't make the same mistakes that I've actually done, Zama.
Mm-hmm. And Peter, actually love the second, particularly the second mistake. I mean, the first one, we talk about it quite a lot. Read your OTP the same way we emphasize reading your lease agreement. Understand the OTP. If there's a clause you don't understand, you can ask the agent, you can ask the conveyancer. Do not sign something that you do not understand. And I know it's a difficult one. I also don't particularly like reading long contracts, but those are some of the contracts that you certainly do not want to misread or sign, and yet you didn't quite understand. For our viewers at home, if you're joining us, I'm joined by Peter Mohlala. We're looking at residential property market investments and looking at some of the nuggets that Peter has picked up on his own property investment journey. And I want to find out from you at home, we're fast approaching episode 300. We're exactly a week away from episode 300. What would you want to see us cover in episode 300? And I think that's a very big milestone episode for us. We're going to try and obviously make it as memorable as possible. So do share with us what you would want to see for episode 300. Now, Peter, you've shared two examples of mistakes that you've made. The one on closing the bond is such an important one, because many people have that as the goal in mind, and it's a great goal in the event where you just want to own your property. You no longer want to have a relationship with the financial institution. You're also not looking at buying another property. You just then definitely close it. Get your title deed, you move on. You know that the only thing that you're paying and servicing are your rates, and in the event where it's in a sectional title community, also your levies and your utility fees. But of course, for people who are looking at property investment, they'll always look at that facility as a vehicle. And as you rightfully pointed out, you've paid to have it open. And in the event where you close it, you're also going to pay to have it closed.
That's another thing,
and that's the other pay, right? So you factor that in. And oftentimes, many of us don't put in money so that, let's say, opening the facility is 5,000 rand. You don't put it in so that it's there. And it's debited from the beginning. If anything, it becomes part of the lump sum. So it's actually, there's the interest over the 20-year period or whatever that period was, as opposed to you proactively putting the money in, in the early stages of the facility. I like that you highlight that there are ways that you can use your bond facility, and that's an episode on its own. So viewers at home, I'm already promising you that that's an episode on its own, and there are different ways that you can unlock value in your particular bond facility. when we look at the flip side, so we've explored the mistakes. When you look at the flip side, what have been some of the things that you've done right that when you look back, you're like, these are the things that have essentially led to me not only being able to buy good properties that are, cash positive or cash flow positive, but have also, added quite a substantial amount of value in my property. What would you say those principles have been that you've used throughout building your portfolio that have served you quite well in expanding your portfolio?
Yeah, one of the easy principles that I've always used is I've never bought any property for the asking price that the seller is asking. Never. And I emphasize this because that's very critical. If you want to be investing for cash flow in particular, I do not offer the asking price. And why am I not offering the asking prices? Because most of the time the asking prices are actually ballooned or are higher than, sometimes higher than the market price. Secondly, sometimes they're higher than the municipal valuation, and so forth and so forth. And if you want to be able to make money and you want to be able to cash flow positively, then you cannot just buy it at market value. So I buy below market, and that's what I have done. I mean, I just gave you a practical example to say one property was actually going for 485. I just gave 400 and they accepted it. Another one was 600. I gave 400. They accepted it. And there are many others. So other examples that I've done. I mean, they were asking for another one, 550. We gave 480. And the thing is, if your plan is to invest, then you need to operate as an investor, okay? And therefore buy below market. That's very important. But secondly, the good part about buying below market is because you're actually buying the equity at the time when the property is registered. You already have equity inside the property, and if you have equity inside the property, your chances of coming to unlock the same equity in the next year and make it as put it down as a deposit then is very high. So those are very important things that I've actually done. Number two, if a property deal does not make sense to me, I walk away. If the numbers in a property deal do not make sense to me, I walk away. Actually, the first thing I do, I just review the offer. I look at it, present it to the seller, and if the seller rejects it, and then I go back and say, you know what? The reason why I'm offering offer A is because of 1, 2, 3, 4. Maybe I'm looking at the current municipal evaluation. Maybe I'm looking at the rentals in the market as we speak. I'm looking at the levies that are being expanded in the same complex and so on. And therefore, given these factors, as an investor, I can't be offering what you're asking. So that's very important. So if my numbers do not make sense, I walk away. But the third thing that I think I've done right is the fact that I'm using the bank's money. As a village boy, like I told you, as a village boy, I do not have cash lying somewhere. I do not have an investment lying somewhere, and so forth. So I'm actually banking on what the bank is going to give me. So throughout the whole years, I'm just going to the bank, presenting my case, asking for money to actually do that. If the bank says no, go to the next bank. If the next bank evaluates and say, you know what, maybe we can look at this, or maybe we can consider giving you 60 or 80%, then I take the 80% and find ways to actually raise the 20%. And then we keep going, and then we do have a deal. So that's how I've been actually moving in order to build my property portfolio. And I think these principles have served me well. They're still doing so. And the last one is about management. From the beginning, when I bought my first property, I hired a rental agent from a particular agency. And I said to them, you know what? I don't know what this rental environment is about, especially where I am, and I'm not into this property things. I want you to be the ones that are going to actually look for a tenant for me. You're going to assess the tenant. You're going to assess their affordability, credit scoring, and so on. Look at their history, where they've been staying. Place them for me. I will do the management, And that's what I did in the first 5 years. But 5 years later, I felt, you know what? I don't even want to do the management. I just want to have the rental management doing it for me, and then we can be able to move forward. And I soon learned that banks also looks at that. If they want to establish whether you are, intelligent, you understand what you're doing, and you are a professional investor, they also want to know who's managing these things for you. So That's important. And I think those are some of the things that I've actually done right, because I mean, I've enjoyed my property journey up so far, which I think it's quite good to actually say.
And I think you've shared such great nuggets. One of our other guests that we've had on the show very regularly, Robin Booth, talks about professionalizing your property investments and the importance of looking at them as a business, because ultimately you're running a business, especially if you know that you're going to be adding different properties and managing those properties, whether you're self-managing or working with a rental agency or even different rental agencies in order to service your properties. Putting those kinds of systems in place also makes it easy for you not to have to worry about issuing the invoices or following up on invoices or sending letters of demand. You know that there's somebody who's doing that, whose primary focus when it comes to your portfolio is servicing that aspect of the portfolio, and you can concentrate on other aspects of growing your portfolio, of managing your portfolio, which certainly helps. Before we wrap up, because I see we're slowly running out of time, any final tips, Peter, for viewers at home who are already in their property investment journey, have perhaps bought their first rental or the second rental property, so they're still in the relatively early phases, so those first 2 to 5 years where you probably have under 5 properties in your portfolio and are perhaps looking at adding a few more. Any final tips that you can share with them in terms of best growing their portfolio?
Number one, property investing, it's a team sport. You must never be tempted to think that you'll do everything by yourself. I think that's important for you to remember that. So we do have, or over time, you'll meet different conveyancers. There'll be one that you'll feel like, these ones are doing the right things. You make friendship with them and keep going forward. The good part is that these relationships are going to actually give you a lot more than you actually are going to be bargaining for. The same story with bankers or mortgage originators and so on. So it's a team sport. You need to continuously establish teams as you go on. Number two, property investing is not a sprint, it's a marathon. If you want to make it, understand that you're buying these things and you're buying them for the right purpose, whether it's capital appreciation or cash flow. For me, it does not really matter the most. But understand that you need to come into this and do it for an extended period of time. And that gives you an opportunity to unlock the equity from the existing properties to be able to invest in other properties. So that's very important for you to remember that. Number three, don't worry because you don't have money. In properties, there are many ways to actually make money. There are many ways to raise money. As long as there's a deal that makes sense, the bank is likely to fund it, or people that are around you, or friends or networks of people that you're investing with are likely to want to be interested in investing in such property. So don't worry about that. I understand it's still very early, but as you meet other professional investors, as you meet other aspiring property investors, you're going to make friendships, and those friendships will come in handy in terms of cash or capital that is necessary for you to actually invest in the next deal. So keep going, but don't worry. Mistakes are part of the game. You're going to make mistakes, and you're going to learn a lot more from mistakes that you make yourself, especially if you're going to be paying money. You're going to make a lot of lessons from there. So don't worry. If you make a wrong deal, don't stress too much. The next deal is more likely to be better than the deal that you've made. And then just keep going. Just keep going. And then your life's going to actually be better when it comes to property investing. Yeah.
And that's certainly a great note to leave it at, Peter. Thank you so much for joining us this evening.
Great stuff. Thank you so much, Zama. And I appreciate you inviting me to come into the show. Thank you so much.
It's only a pleasure, and that is Peter Mohlala, who's been sharing with us his own property investment journey here with us on the Private Property Podcast with myself, Uzamantungwa Khumalo. Well, that wraps up this week's edition of the Private Property Podcast. As we wrap up Friday, we're going to be back on your screens on Monday at 7 p.m. as we usually are. I want to find out from you, what would you want us to do for episode 300? What do you want to see on your screens for episode 300, as we will be celebrating 300 episodes of the only only daily property talk show in South Africa next week, Friday. Until next week, Monday, it has been a pleasure to be with you this week. From myself, Zamantungwa Khumalo, as well as the rest of the team, it has been great. Do hope that you're going to obviously, stay home and stay safe over the weekend. And I'm very jealous. I have to say this again. I'm very jealous of everybody who's able to go, vaccinate. I cannot wait to be able to also do the same. So I do hope that you will be staying safe. Of course, you can look forward to the Home Shoppers Show with Chad at 8 p.m.